everyone. Welcome back to the Relai Bitcoin podcast today with Peter Dunworth. Peter, how are you and what's on your mind currently about Bitcoin?
You know what? Life is pretty good as we speak right now. And with what's on my mind, Bitcoin right now, I've got to say there's a lot of concern and fear out there around Bitcoin crashing to $90,000 a coin where it was at the start of the year. I'm like, really? We're 5 weeks into the year, or what is it, 6 or 7 weeks in, and you know, we went up, we went down, and yet here we are. So I've got to say I'm really happy with what I'm seeing with Bitcoin on many levels. So I think Bitcoin's in a great position. And one thing that I've got to say, in looking at this for say the last 10 years, I've never seen Bitcoin in a better position than where we are right now on a risk-adjusted basis. So I look at everyone's looking at how Bitcoin compares on say a global scale, and I look at this and think, with what's happened over the last 3 months, we now have the left tail event, i.e. Bitcoin going to zero, taken off the table. We've got the global reserve currency is supporting Bitcoin. We've got a superpower in the US looking to adopt it as a strategic reserve. And I look at this and think this is a complete de-risking of everything that Bitcoiners have known up until this point. So whether or not we get a strategic reserve or not, I'm not sure, but we've got an administration for the first time in Bitcoin's history that's looking forward and favourable to Bitcoin. So I think Bitcoin's in a great spot.
Mm-hmm. But isn't it strange that at the same time, while there are so many bullish signals, it's still kind of the price seems somehow suppressed, right? It fell below 90K, which in itself is already fun that we, like the Bitcoin community or Twitter or people are just freaking out that it, crashed to below 90K, where 90K like 2 years ago would be an absolute all-time high, right? So it's funny, but still it's kind of, as you said, Bitcoin is in such a good position, and still it's now quite far away from like 10-15% away from the last all-time high of $108. So why is that?
I just think there's a lot of movement of old coins washing around. I think there's new players setting themselves up. There's institutional adoption happening in real time before our eyes. There's the financialization of, or Bitcoinization of the financial world, and could talk for hours on that. And I just look at, this takes time. What we're looking at with the volatility of Bitcoin is the market cap of Bitcoin is circa $2 trillion. And what it really needs to be is $1,000 trillion. And so these wild fluctuations that we see are really just a blip on the radar through time. And this is just the market finding an equilibrium for where we are at this very moment. And probably one of the greatest sayings Bitcoiners have is zoom out. Once you zoom out, you realize, oh, okay, on a log scale, even a log scale, Bitcoin and what we've been through in the last 2 weeks, like the joke, I survived the crash of Sunday afternoon. These are things that in the fullness of time, I think we'll appreciate that. What we are seeing is a market trying to understand what this thing is, and there really isn't a good explanation of what Bitcoin is. And we're seeing this mash up into the traditional financial space. And so what you're seeing is price discovery in real time, both for better or worse. Some people are understanding that, hey, this is a sell the news event, so they're trying to get out. You've got Bitcoiners who have held on probably for 10, maybe 12, 13 years. And now all of a sudden $100,000 Bitcoin is meaningful, life-changing amounts of money for them that they want to cash out. And I just think it's a natural cycling of new Bitcoin owners, old Bitcoin owners to new Bitcoin owners, and we're going to see this continue for a long time to come.
Yeah, exactly. There's always going to be volatility, and it's hard. The short-term volatility is hard to explain, right? But then the long-term trajectory is just, as you said, if you look at the 5 or 10-year chart, it's incredible. And if you look back 10 years, look at the chart, and then you project for the next 10 years, it's pretty clear where it's going. Where have you been 10 years ago? What have you done 10 years ago?
10 years ago, let me just
2015.
Put my thinking cap on. So 2015, I was starting to understand Bitcoin, and I've got to say I'm very grateful for a very patient brother who spent 5 years answering any questions that I may have had. And as a side note, he was in Silicon Valley. He went to chase a tech dream, started basically a crypto exchange that was a back-end piece of infrastructure that helped support all kinds of businesses, from Gemini to Coinbase in part to startups in this space. It was a really fabulous business, and he was quite visionary in that perspective. And he was very patient in explaining to me why Bitcoin is really important and what it does. Whereas, and I love sharing this story because everyone has this moment, but I remember the first moment he brought it up to me. He said, I think you should buy Bitcoin. And this is back in 2011, so nearly 15 years ago, wow. 14 years ago. And excuse me, he said, oh, you should buy some. And I said, and literally I went through the list verbatim of what every person does when they first hear Bitcoin. I said, that'll never work. Governments will shut it down. There'll be a new Bitcoin. And then it took me 5 years because sadly there wasn't the education, there weren't the books, there weren't the podcasts, there wasn't readily accessible information to make an informed decision as to why this is important and why you want to invest in it. So it took me 5 years of talking to my brother every other day to figure out, oh my goodness, this is really important and I want to put money to it. So 2015, 10 years ago, that's where I was. I was literally learning about Bitcoin and watching whatever podcast I could and trying to get comfortable with it from an investment perspective.
Yeah, exactly. And what did you do, like from a professional point of view? Were you kind of close to such an industry already, or were you kind of...
That was my problem. I was too close. So I managed money for a living. We ran a multi-family office where we looked after some of Sydney's wealthiest families. And because I've had 25 years in traditional finance and education training, I feel like I was completely indoctrinated into the fiat banking system, and I understood that too well. And this is the problem that I think Bitcoin presents is Bitcoin, when you tell someone, hey, did you know that there's perfect money that can solve all the world's woes? It can solve debasement, it can solve inflation, it can solve, and you list off all the problems that bad money causes. Immediately you go to a place of pushing that away because it sounds too good to be true. So the first financial lesson I got as a kid, and probably you got as well, and most of us listening, would be that if it sounds too good to be true, it probably is. So it immediately goes in the discard basket or put a red flag up. We don't want to learn more about it. But persisting and basically having to unlearn everything that I'd learnt and studied for the last 20 years, realised that, oh my goodness, this thing is really quite incredible. And what's very unique about Bitcoin is I've probably spent 20,000 hours looking at it, listening to podcasts, learning about it, reading about it, spending time on it. And what is very unique from an investment perspective, and we give a broad range of investment advice across all asset classes, stocks, bonds, property, you name it, alternative assets, private equity, venture capital, credit, you name it. We look at it and advise on it. But what is very unique about Bitcoin is the longer I study Bitcoin, the better it looks. Whereas every other investment that I've spent time on, you start to uncover problems with the deal or the investment or the manager or the company or the balance sheet or the P&L, you name it. You typically uncover problems. But from what I've seen, looking at this and spending so much time studying it, the more I study it, the better and more elegant it is. I sit there and look and think, oh my goodness, this is such an elegant, beautiful system.
How do family offices look at Bitcoin? Maybe when you got it, like 10 years ago, you understood and probably you started to talk to some of your clients or other people in your network that you were close to that were kind of in this family office scene. How did they wake up to it? Were they open about it? Did they get it straight away, or did it take a lot of time, or do they still not get it? Like, what are some stories you can share from a family office perspective? Because as Bitcoin is this great store of value, very long term, it's actually a perfect match for a family office investor, right?
I think it is the ideal investment for family office. And I was on a call this afternoon with an office and talking about the virtue of having this or having an allocation to Bitcoin and why it should be incorporated in the family office. I can tell you where the conversation started, how it started and how it ended, or where we're at now. And the conversation 10 or 9 years ago started with, hey, let's have a little bit of exposure to this. It's highly risky. Here's 3 pages of disclaimers telling you that this could be a catastrophic failure and literally a zero return on your invested assets. And it was huge career risk for me in talking about that. And I was very fortunate that we're able to talk about it because of the rules and regulations in the country meant it was outside a financial product. So it wasn't classified as a financial product, so we could talk about it. But despite it not being a financial product, we could talk about it. But that came with literally 4 pages of disclaimers and warnings that we had to go through with the client and say, hey, you could. The too long didn't read of that 4-page document was, whatever you invest in this could go to zero, so please be prepared for that possible outcome. Now, although we thought it was a low outcome, it was still an outcome that we had to account for and had to express in written terms with clients. Fast forward to where we are today, and in light of what we talked about earlier, the left tail event of Bitcoin going to zero, I think, is now completely removed. It's no longer on the table. We now have Larry Fink, we've got the ETFs, we've got Donald Trump and his administration, pro-Bitcoin, everyone's pro-Bitcoin. All of a sudden that Bitcoin going to zero conversation's now off the table. And now we're at a real, I think, an inflection point where now there is career risk in not being able to talk about it. Because how do you, as a professional, look at the best performing asset over the last 15 years and think, no, I can't talk about it to my clients? And this is where investment advisors globally would love to talk about it, but they're in a system and a structure that prevents them from having that conversation with their clients because they're not licensed to give advice on it, or they don't have professional indemnity insurance to cover them in the event that something goes wrong, or their internal research hasn't approved that product. It's not on the approved product list. There's a multitude of reasons as to why this had happened. And this is where I look at this and I feel sorry for clients who are stuck in a system that is going to prevent them from accessing this. And what we're going to see is, and this is something that I think is happening in real time before our very eyes, and because we're Bitcoiners, we understand this, we're Bitcoin native. But what I'm seeing in real time is Bitcoin terraforming the broader financial system in real time by coming up with stocks like MicroStrategy or Fold or MetaPlanet. All of these companies are taking advantage of and harnessing Bitcoin. And so what we're seeing here, and this is giving our clients a huge advantage, is we have Bitcoin being the primitive, and then we've got the derivative being MicroStrategy. And then if you want to look at the derivative of the derivative being MSTY, or the income funds that are generating income off the back of the volatility of MicroStrategy, I look at this and think, this is literally reshaping how portfolios should be created. And in my mind, I'm thinking in it from a traditional sense. Most clients should have the heaviest weighting to Bitcoin because, to me, it's the lowest risk. Have potentially a little bit exposure to MicroStrategy, and then a little bit on top of that in the form of an income that they need to generate. Because sadly, most Bitcoiners I know, they don't want to sell their Bitcoin. They want to hold on to that through time. And the thought of selling Bitcoin to monetize it is a really, it's a bad thought. It's hard to get their head around. So people will want to buy an income producing asset like MSTY. But what's interesting about that is what they're doing is they're squeezing the volatility that's derived from Bitcoin in MicroStrategy into an income fund that's generating yields that are unthinkable to traditional finance. And therein lies the juxtaposition that you've got Bitcoin now influencing the rest of the world, because Bitcoin, the best performing asset, MicroStrategy, the derivative of the best performing asset, is the best performing stock, or MetaPlanet if you look globally. And then you've got this income yield that's producing a wild amount of income on the back of the volatility of Bitcoin, on the volatility of MicroStrategy. So all of a sudden, the best performing assets in all the classes, whether it's the actual underlying commodity itself in Bitcoin, or the stock in MicroStrategy and MetaPlanet, or alternatively the convertible notes and the debt debt markets, the best performing bonds in the world have been MicroStrategies, or the best performing income funds are now all derivatives of Bitcoin. And to any Bitcoiner, you understand that well ahead of the traditional finance space. They look at it and think, oh, this is a Ponzi, it's a scam, it's a scheme. But if you're a Bitcoiner and you understand the primitive, you have a huge advantage on traditional finance to basically get a much better return.
Mm-hmm. And is that the narrative that you try to explain to your clients at BTC Advisor, this project that you're doing for a few years already, right?
Yeah, and this is where, to me, the most important thing is owning Bitcoin and securing that for the long term. And this is where the Bitcoin Advisor was born out of the work that we did for the families, that we wanted our clients to self-custody their Bitcoin. But until multisig came along in a workable fashion in sort of 2017-18, there wasn't a way for us to help clients self-custody their Bitcoin. So they were actually at more risk in self-custodying their Bitcoin than they were than just leaving it on the exchange. And this is where we've pioneered a service whereby we help clients self-custody their Bitcoin. We put that into what we call a collaborative security arrangement, whereby the client has full control over all of the keys in the arrangement. And there's 3 keys in total. The client controls all 3, but the client holds one, the software provider holds one, and we hold a default backup key for them in the event that something happens to them. And I'm really thrilled to let everyone know and yourself know that we haven't lost a single Bitcoin, not a single Satoshi, using this collaborative security model. So we haven't had a client suffer a phishing attack or a scam or sending to a wrong address. And most importantly, we've sadly had 3 clients pass away, and we were able to recover and move that Bitcoin to the family and the estate on their death. So everyone who was meant to get their Bitcoin ended up receiving it. And this is the power of that collaborative security. It also, on a personal note, I think the biggest thing with that is, as well as, excuse me, it allows people who are new to Bitcoin to allocate much greater amounts of capital much quicker, because they now have a safety net in place that ensures that they're not going to lose any Bitcoin if they self-custody. And this, to me, has been the big hurdle for most Bitcoiners in getting down that rabbit hole and having larger chunks of capital allocated to it in a speedy sense, is that we're all told not your keys, not your coins, so you want to self-custody it. But the thought of someone who's not skilled and not trained in proper management of self-custodying Bitcoin is terrifying. And so a lot of people don't want to put 10, 20, 30, 50% of their net assets into an asset that they're not skilled enough to look after. And this is where I think the service that we offer is wildly valuable, because what that does is it removes the fear of loss from clients, in that if they've made the decision to buy Bitcoin, then they can allocate capital as hard and as quickly as they want to with no concern for losing it, because they've got this safety net and infrastructure built out underneath them to stop anything bad happening by way of loss. And that's one of the fun things that we get to do. Like, obviously getting coins into self-custody is a real buzz for us and for clients at the same time. But we've done some research of the data that we've got, and we've worked out that clients who work with us on average in the first 12 months increase their Bitcoin stack by 51% in the first 12 months.
Wow.
And I put that down to the fear of loss. When you remove the fear of loss, all of a sudden it's okay to think about selling an investment property or selling down some shares or applying some in the business or finding other pots of capital that they otherwise wouldn't think of. But if you've managed to cap the downside and know that you can't lose your Bitcoin, then the only thing you need to deal with is the volatility of it. And most Bitcoiners are really good with dealing with volatility. They're just not dealing with exogenous shocks by way of risk of losing the Bitcoin.
Mm-hmm. But do they really understand the self-custody premise in the first place, or is there a lot of education that you need to do with them? Because I could imagine these are like relatively wealthy fiat investors. They're coming from a fiat world, fiat mindset, and like traditional banking system. So if they want to secure an asset, they usually look at a bank, or in the Bitcoin space, they would look at a exchange or a ETF to hold the Bitcoin for them. That would make probably that's the first step that they would think of, right? So how much does it take for you to educate them on the self custody? Because as you said, it's a bit more complex, right? And it goes out of their world that they know that there's a custodian and you can rely on that. Now you are in full control, and there are several keys and there are several other providers in there. It's a bit more complicated, so it requires them really to understand the benefit of it, right? How's that going with different clients that kind of coming from this old world?
I think it depends on where the wealth is currently stored and what that looks like. So we're fortunate in Australia, and I've got to say most of our clients are property investors. So the bulk of their wealth is generated in property, and they understand property. And there is a really easy way for property investors to understand why not your keys, not your coin is important. And I had this conversation just today with a large family office who I've probably known for a number of years, but they initially went down the road of buying Bitcoin through Bitcoin exposure or Bitcoin proxies in the form of Bitcoin miners and crypto funds. And we did a review of their situation, had a look and said, you need to own the underlying, and you want to own the underlying. And then we went through the conversation around what do you need to assess for, once you remove, I guess, all of the distractions from the conversation, i.e. it's only about Bitcoin. Now we need to discuss what's the best way to hold it. Because they're property and they understand property inside and out, and they've got most of their wealth in property, it was a really simple conversation. We just said, knowing that they own freehold property and they would never invest in a real estate investment trust like a property REIT that is listed, I said to them, well, we can, not your keys, not your coins, own Bitcoin in self-custody, or you can own an ETF, and that's kind of like owning a property REIT, but you'd never want to do that. So why would you want to do that with Bitcoin? Because what I think they understand is, and this is what we want to try and provide for our clients, is maximum optionality. And when you own the underlying versus owning the ETF or a proxy, you have maximum optionality by owning the underlying. And that's why it's so critical to understand owning the underlying is the most important thing you can do. And with the property guys, what becomes a distinct advantage for their property business is their cost of funding. And one of the things I like to talk about, although it's probably well ahead of its time right now, and we're just in the throes of actually seeing the banking system built out for Bitcoin, but what I describe to them is that if you have Bitcoin, you will have the best loan terms possible in the future, because Bitcoin is the best form of collateral. So you're going to be rewarded with the best loan terms available. And although the Bitcoin lending scene at the moment is relatively sparse on good lending options, or cheap investment options, or borrowing options, the banks are in the process of building out this facility right now. And I said to this family office today, would you like to access cheap capital from Japan at 2% with no foreign exchange risk? And our rates are running at 5 to 7%. So that's a 5% differential that they could access if they only had a globally ubiquitous form of collateral that any bank in the world will want to have. And now with the repealing of SAB 121, which is the US legislation on how banks account for Bitcoin on their balance sheet, being done, that paves the way for banks custodying Bitcoin and for that conversation to happen in the next 5 years. And so what we're trying to set clients up for is making sure they own the underlying, because that is where the value in the future is going to come in. Whereas if you look at owning the ETF, you're going to be stuck on financing at margin lending rates at in your local jurisdiction. So in Australia, that's 7 or 8%. In the US, it's probably somewhere between 7 and 10%. And you're going to forfeit the ability to go to a Japanese bank and borrow at 1 or 2%. So when you bring that cost of financing to a business in Australia that focuses on property, or a business in Germany, a business in the US, that cost of capital becomes a distinct advantage for that property business moving forward. And that's how I'm trying to position this with property clients. And they understand that immediately.
But do they ask, like, okay, for how long will this still take for all of this to play out? Because I agree with you 100%. Bitcoin is the best collateral asset. It's the best in basically any asset, whatever you want to do with the asset. But it really makes sense to have Bitcoin as a collateral to take out a loan or a mortgage, like soft money, right? You have hard money, you give it as a collateral, you get the soft money, and then it just goes up and up and up, and so you can take more and more and more of the soft money. It just makes sense for also banks to come into, and we're seeing, I think, in Switzerland, for example, we're seeing two kind of crypto banks. So they got their banking license just for this use case of brokerage, custody, and lending of Bitcoin and crypto with fiat, etc. The traditional banks are coming as well, first with custody and trading, like brokerage offerings, but of course lending will be their next steps in the next few years. But I feel like it. And then Switzerland's very progressive. All the other EU countries, I don't really see a lot of that happening there. There are, of course, some startups starting to focus on BTC lending. But realistically, what do you think? What's the time horizon that we're looking at?
I think it will be a completely different landscape in the next 5 years. So 2030, we're in 2025 now. By 2030, my expectation is all of the infrastructure will have been built out on our traditional banking rails to accommodate Bitcoin. So that means there are basically 3 stages that need to be set, or 3 pieces of infrastructure that need to be set. One is custody. That's the precursor to it. But the thing that was stopping the custody arrangement happening was the SAB 121. That removed any ability for the banks to custody it, because they need to hold assets one-to-one, whereas when they hold cash, they don't need to hold any assets on top of it. So it was prohibitively expensive from a capital perspective to do that. Now that that's out of the way, the banks can custody it without the cost of capital attached to it. That's a big deal. That then opens up the next avenue, which is the savings and loans business on the back of that. That is going to be a huge business for them. And this is where I'm really optimistic on a number of fronts, but particularly with a supportive administration in the US. They are the global cop when it comes to financial regulations. So whatever they say is going to go. And I know, you have been suffering in the EU from the MiCA regulations, and all of these regulations that felt to me, and this is pure speculation, so don't put an ounce of thought behind that, but it felt like those MiCA regulations were rushed through in an event to preempt what was coming in the form of Donald Trump and his administration that was pro-crypto. MiCA regulations felt very stifling. It felt like it was a very bureaucratic process that went through that stifled competition in that space. Now you've got the complete opposite in the US, which I think will have a major reset on those European regulations. They'll say, no, we're not doing that. This is how we're doing it. And the rest of the world is going to fall in line like dominoes behind it. It's just going to take 6 to 12 months. And then on the back of that, we're going to have the custody, we're going to have the banking, we're going to have the loans and the savings account built out right before our eyes. And all that will happen, my expectation is, in the less than 5 years. Interesting.
Do you see a bigger kind of urgency from clients lately to also maybe shift from other asset classes that they own, real estate, stocks, bonds, etc., gold even, to Bitcoin?
Yes, and probably the biggest shift I've seen is property investors. That is the number one, as far as, if you had a pie chart of the amount of capital, where capital is coming into Bitcoin from, the number one is from property. By the proverbial country mile. There is so much capital flowing in from that, because once you make a decision with property, there are a whole host of factors that need to be considered. Firstly, it's a very illiquid asset. So when you're doing that, there is a major intent. It's a sign of intent that you plan on changing your investment thesis, because it takes typically somewhere between 3 to 6 months to sell a property. And what we're seeing is that clients want to action this immediately. So what they're doing is they're financing other properties that they've got in order to buy the Bitcoin that they want while they're waiting for the sale of that investment property to go through. And so what they're doing is they're effectively speed running the purchase of the Bitcoin so they can buy it now, take advantage of the, what's expected to be the bull run coming. And when the property settles, they can take that cash and either pay off the debt and buy more Bitcoin, or just buy more Bitcoin with the cash.
Makes a lot of sense. That was super interesting, Peter. Thank you so much. My last question always on this podcast, of course, I need to ask you as well. So you're a Bitcoiner. How much of your total wealth, as a pie chart as well, if you want to look at it as a pie chart, do you hold in Bitcoin?
There might be a thin little sliver that's not orange.
Like this very small line of blue, which is fiat.
Maybe, maybe, yeah.
Well, really, but not, you don't invest in any other asset class anymore?
No.
Wow.
So it's Bitcoin or a Bitcoin proxy. So there is no alternative. It's just Bitcoin. That is
interesting. But what are the Bitcoin proxies then? So you said companies like MicroStrategy,
companies
miners.
like MicroStrategy, MetaPlanet, holding no miners at the moment, and probably full disclosure on the back of this, which is kind of an amusing story, but God bless my wife. I said just recently we sold our home to buy more Bitcoin, and
wow.
Yeah, she said to me. She said, I said, I want to sell the home and buy more Bitcoin. And she's like, you don't need more Bitcoin. I'm thinking, everyone needs more Bitcoin. Everyone. I mean, Michael Saylor has 500,000 and he doesn't have enough. So surely, we need more Bitcoin. And God bless her heart, she said to me, she goes, we both know you're never going to sell it. So what's the point of buying any more? And I was like, that is a very, very good point. So, God bless her, and to honour her wishes, we didn't buy more Bitcoin. We bought a Bitcoin proxy in the form of equities, and I won't mention what it is because you'd probably guess. But I did want to honour that wish that we don't buy more Bitcoin because we don't sell Bitcoin. That's the... Yeah.
It is a good point that she's making, right? Why are you accumulating all these Bitcoin if you never intend to sell them or invest in something else? But I think that's then also where the lending comes in, because the more of this best collateral in the world you have, the more fiat money you can get later for very good terms, and then you can finance everything, like your lifestyle, your entrepreneurial activities, etc., with that, the education of your kids, etc., without having to sell. You don't actually have to sell the Bitcoin to afford a very good lifestyle. So no. That's I think where most of the Bitcoiners are in their thinking, why they are doing it, why they are accumulating the Bitcoin without any intent to sell it, right?
That's it, and this is where the view of owning a home. Obviously, we did own a home. We don't own a home at the moment because we've got that money invested in Bitcoin or proxies. And the thought about this is, and the Australian property market is very unique. To me, it is way overpriced. And to put this into consideration for you, you can rent a beautiful home in some of the best areas for somewhere between 1% to 2% of the value of the property. That's all it costs you. Now, in order to hold that, it's probably going to cost you, hundreds of thousands of dollars a year in interest, and then you've got all sorts of maintenance and the rest of it that's required on the property. It doesn't make sense from an investment perspective when that property, I think, is quite toppy at the moment and will be lucky over the next 10 years to achieve a 5 to 10% return over the next 10 years, versus an asset that I think Bitcoin will grow comfortably over the next 10 years at 50% per annum. So for me, I think it's a win-win. We get to live in a beautiful home that costs next to nothing relative to what it costs to own it. And we get to have our money invested in the best performing asset that there ever has been.
That makes a lot of sense. It's a no-brainer. Good on you. Thank you so much, Peter. This was an amazing chat. Thanks for the conversation, and talk to you soon.
Thanks very much. Great to see you.
Bye.
Hey, this is Joel again from the Relai team. First of all, thanks for listening or watching to the podcast. We really appreciate your help here. If you want to actually help us out further, you can leave us a 5-star review in the Apple Podcasting Store, in Spotify, on YouTube, or wherever you listen to podcasts, because this way we'll actually reach more people with this fantastic content. And I'll see you in the next one.